everyone, welcome to EduTap and welcome to the Finance Current Affairs session. In today's session, we are going to discuss a very important news article of finance that is regarding the Monetary Policy Committee meeting that has concluded in December 2022. So recently the Monetary Policy Committee meeting was held, and in that meeting there were the important decisions that were taken regarding the repo rate and the rates. And there has been the GDP forecast, the growth forecast that has been changed. So what is the new growth forecast? What was the previous growth forecast? What is the inflation forecast that has been given? What is the assessment of the global and domestic economy that has been given? So all of this we are going to discuss in today's session, and there are the important data points that you have to understand and remember. So before starting with this important session, there is a big announcement from EduTap that we have brought for you, the comprehensive guide for RBI, NABARD and SEBI. So through a single guidebook, you can get all your common queries answered. You do not have to visit different websites. You do not have to visit different links to get the information regarding the exam, regarding the preparation, regarding the organization. If you want to know about the exam, that what is the syllabus for the exam, what are the previous year cutoff for the exam, and what is the pattern for the exam. So all your common queries can be answered through a single guidebook. Okay, even if you want to know about the preparation for the exam, that what should be the strategy for the preparation, what should be the sources for the preparation, all your common queries can be answered through a single guidebook, and this is absolutely free of cost. Okay, and you can easily download this. The link is given in the description box below. This is absolutely free of cost to save your time, to save your effort. So do download this ebook. The links are given in the description box below. Okay, and this is going to save a lot of your time and effort, and it will increase the level of your understanding for the exam. So now starting with today's topic, that is regarding the bi-monthly Monetary Policy Committee meeting that has happened in December 2022. So recently this meeting has been concluded, and there are the decisions that has been taken by the Monetary Policy Committee. So this is the complete schedule for the meetings that were held, and that is going to held in for the financial year 2022-23. So you know that the financial year is going to start, it has started from April 2022 and it is going to end in March 2023. Okay, so this is the schedule that has been given, and according to the schedule, the meeting has happened in December 2022, and in that meeting, seeing on the basis of the assessment of the macroeconomic situation of the country as well as the global situation, the Monetary Policy Committee meeting has taken a decision to increase the repo rate by 35 basis point. That is, the repo rate was 5.90% before, and it has been increased now by 35 basis point. That is, it has become 6.25%. With immediate effect, the repo rate has become 6.25%, that you can see. And when the repo rate is changed, that means the other rates are also changing, because the SDF and the MSF are linked with the repo rate. So here you can see it is the SDF, here is the repo rate, and here is the MSF. So if repo rate is 6.25%, the SDF is below repo rate by 0.25%, so it has become 6%. So it has become 6%. Now the MSF is above repo rate by 0.25%, so now it has become 6.50%. So through the repo rate, you can remember that what is the SDF and what is the MSF. The other rates, bank rate is 6.50% because it is equal to the MSF rate, and the fixed reverse repo rate has not been changed. It is still 3.35%. Okay, so the MPC has also said that we are going to have the withdrawal of the accommodation to ensure that the inflation remains within the target. So still the focus is on the inflation, that the inflation should come in between the target. From the target is what? 2% to 6% is the range, and the target is 4%. So the inflation should be around 4% plus minus 2%. Okay, so the inflation has to be within the target range while supporting growth. The growth is also the focus, but the main focus for now is inflation. We have to control, the RBI has to control the inflation. So these decisions are in consonance with the objective of achieving the medium term target for consumer price index, that is the retail inflation, that is the inflation that is going on. For the inflation, the target is 4% within the band, within the range of plus minus 2%. So that all of you must know that what is the range, what is the band. Okay, so I hope you have understood that the repo rate has been changed, and with that, what is changing? The SDF and the MSF is changing, and the MPC has said that we are withdrawing the accommodation. Okay, for what? For bringing the inflation within the band. So now moving forward, let's understand the assessment of the domestic economy, the inflation, what is happening for the inflation. So the inflation has reduced. It was 7.4% in September. So it was quite high in September, and in October it has reduced. It has reduced to 6.8%. It is around 6.7 something percent. So this is the round off data. Okay, so the CPI inflation, the retail inflation, the inflation for the consumers, it has reduced to 6.8%, and that is considered very good because 7.4 was very high. And it is also good that due to the seasonal winter correction, winter crops are here, so the food inflation has softened, especially the vegetables. The inflation has softened, it has reduced, but aided by easing inflation in vegetables and edible oils, despite sustained pressures from the prices of cereals, milk and spices. So the food inflation has softened because the vegetables have become cheaper, like the inflation is reducing in the vegetables and the edible oils, though the prices of cereals, milk and spices are still very high because there is the supply shortage that is happening in the cereals and the spices, and for the milk the feed cost is very high. Okay, it is still very high. So what you have to remember is that the food inflation has softened due to the vegetables and the edible oil, and the vegetables have become like cheaper, we can say, due to what? Due to the seasonal winter correction. The prices of cereals and the spices are still high due to the supply shortage. The near term supply shortage is there, and the milk prices are high due to the feed cost. The fuel inflation registered some easing in October, driving by softening of price inflation in LPG, kerosene and firewood and wood chips. So you can understand that the prices of some commodities are increasing, the prices of other commodities are reducing. So the core CPI, that is the CPI, the consumer price index, excluding the food and fuel inflation, persisted at elevated levels. So it is a high level, it is at high level at 6% or above 6%, with price pressures almost most of its constituent subgroups. So the manufacturing, like the other goods, then the fuel and food and fuel, they have the high inflation still, it is above 6%. So the core CPI is above 6%, you have to remember that. So the unabating, that is the persistent geopolitical tensions, have impacted the uncertainty. They have caused the uncertainty to the fuel, food and energy prices outlook. So still we are, like the RBI is saying that in the coming months what can happen, that the inflation can still go very high because there is the uncertainty due to the geopolitical tensions that are there. The correction in the industrial input prices and supply chain pressure. So now there is the supply chain pressure has reduced. The supply is going smoothly for the industrial sector at least. But what is happening now, that the supply chain pressure has reduced, but the input prices that has increased in the previous months, now the industries are pressing those input prices to the consumers. So now what has happened, that the supply chain pressure has reduced, but the input prices pressure will increase on the consumer goods. Okay, so the input prices that has increased for the production, those pressures are going to come in the consumer products. Okay, so here you can see that inflation is projected. Now what we were waiting for, that is the inflation forecast that has been given by the MPC, by the Monetary Policy Committee. So the inflation is projected at 6.7% in the financial year, for the financial year 23, that is for the financial year 2022-23. The inflation projection is what? It is 6.7% as given by the in the previous bi-monthly Monetary Policy Committee. So the inflation forecast is still 6.7%, while the growth forecast has been changed. Okay, so here let's see the merchandise exports. So the goods exports, they have contracted. Like for the 19 consecutive months, the exports, the merchandise exports, they were increasing, but now they have contracted in October. So you can see that this is quite a special thing that has happened, that it has contracted after expanding for 19 months. Okay, growth in non-oil, non-gold imports has decelerated, that is, it has decreased while it was increasing in the previous months. So now the overall liquidity remains in surplus. So it is still surplus, the money supply is still in surplus, and there is the average daily absorption under the liquidity adjustment facility that is happening. So here you can see the data. Okay, this is not very important data, just I am showing you that in the August-September month the absorption was greater, and in the October-November the absorption is kinda less. Okay, so here on the, now here the data is important because it is on the year-on-year basis. So year-on-year basis the money supply has expanded actually by 8.9% as on November 18, 2022. So you can see that from the previous year the money supply has expanded while there is the absorption that is happening. So this is quite contradicting. At one side the RBI is trying to absorb as much as possible, but at the other side the money supply is increasing because the banks are doing the credit creation and the banks credit are increasing. So due to that the money supply will of course increase. So the money supply is increasing because the banks are doing quite high credit creation. Okay, the credit creation is high by the banks. Okay, so while bank credit rose by this much 17.2%, so you can see that the bank credit is increasing, and due to that the money creation is happening, the money supply is increasing. At one side the banks are doing this, at the other side RBI is trying to absorb as much as money supply as it can. Okay, so India's foreign exchange reserves, you can see that it was placed at US dollar 561.2 billion as on December 2, 2022. So I hope you have understood this point very clearly, that the RBI is trying to absorb the money supply, it is trying to absorb the liquidity, but at the other side the banks are doing quite good in the credit creation and there is expansion in the money supply. So the robust and broad-based credit growth and the government's thrust on the capital spending on the infrastructure, this has bolstered the investment activity. So investment activity is very high, and that's why with high, see the repo rate is increased. The repo rate is increased so that the interest rate for the people increases. So repo rate is, again and again I have explained you this, that the banks are taking loan from the RBI at the repo rate. So when the banks are taking loan from RBI at higher rate, it will give to consumers, it will give the loans to consumers at higher rate. But still the investment activity is so strong that even after the increasing of the interest rate, still the people are taking the loans for investment activity. Okay. However, the consumer confidence is also very high. The RBI has done the survey, so the consumer confidence is improving, and the economy, however, faces the continuous headwinds from the persistent geopolitical tension. So the problem is coming from the geopolitical areas, from the geopolitical tension. Our consumer growth, like consumer demand, is high. The absolute demand in the urban sector, it is buoyant, it is high. In the rural areas, the demand is increasing. The investment activity is also very good in our country. So the problem that is coming is from here, from the geopolitical tensions. Okay, tightening of the global financial conditions and the slowing external demand. So the problem is created by the external demand, the problem is created by the geopolitical tensions. Okay, so even if the RBI is trying to increase the repo rate, what is happening, that the banks and the people are still taking a lot of loans. The people are still doing the investment activity that they have to do. So the real GDP growth for 2022-23 is projected at 6.8%. So the projection was 7%. The RBI in the Monetary Policy Committee in its previous meeting has given the projection of 7% of the real GDP growth, but the MPC has reduced the real GDP growth projection, that for this financial year, for the financial year 23, the real GDP growth will not be 7%, it will be 6.8%, and this has been reduced due to the slowing of the external demand, due to the slowing of the exports, and due to the the conditions that is going on in the foreign countries. Okay, so the growth forecast has been decreased. You have to remember, it has been decreased from 7% to 6.8% by the Monetary Policy Committee. The growth forecast has been reduced from 7% to 6.8% for the financial year 23. Okay, you can see the data here. So now coming to the domestic economic conclusion, the inflation is a battle that is not over. The inflation is going to be sticky, it is going to be high, and that is what the RBI governor has said, that is what the Monetary Policy Committee has said. And there is the monetary policy action that is going to be continuous, that is the RBI has to take very intelligent actions for controlling the inflation, and the repo rate is going to, so this shows that RBI wants to keep the repo rate at high percentage. Okay, it is going to increase the repo rate in the coming months also. So now inflation has ruled at or above the upper tolerance level. So you can see from January 2022, the inflation is above 6%. Okay, the headline inflation is expected to remain above or close to upper threshold in Q3 also. So here you can see the data. What you have to remember, that since January 2022, the inflation is above 6%. Economic activity has held up well. you can see that our demand is increasing, the rural demand is increasing, the consumer confidence is quite improved, the investment activity is going good, the credit growth is going good. So we have held up really well. The economy is quite resilient, supported by domestic demand. Net exports would remain subdued, it would remain decreased because the external demand is decreasing. So you have to remember that the net exports are decreasing due to drag from evolving external demand conditions. Okay. So the MPC is of the view that further calibrated monetary policy action, thoughtful and very careful actions has to be taken, that is needed to keep the inflation expectations and to keep the inflation anchored, okay, at a percentage near or below 6%. Break the core inflation persistence. The core inflation is persistently above 6%, okay, and contain the second round effect so that does not happen. The inflation do not keep on revolving and becoming high and high and high, okay. So these were the people. So here you can see that who has voted for what. So it was all the five members out of the 6 members have voted for increasing the repo rate. There was only one person, that is the Professor Jayan R. Verma, that voted against the repo rate hike. And similarly for the without withdrawal of accommodation, there are 2 people that have voted against this part, okay, that we should stop this withdrawal of accommodation. So they have voted against this. So you can see that who has voted for what, okay. So now let's move forward to the global economy. We all know that the global economy is seeing a downside. There is the downside that is happening. The global economy is at a low level now. The global growth is set to lose momentum as monetary policy actions are tightening all over the world. All the major, not only the emerging markets, not only India, but all the important or all the major economies are tightening their monetary policy and they are increasing their rates, okay. Financial conditions, as consumer confidence weakens, and in the outside countries what is happening, that the consumer confidence is also weakening with the rising cost of livelihood. Inflation remains elevated not only in India but all over the world and persistent across countries as they grapple with food and energy price shocks. So there is the much shock that is coming, much pressure that is coming. The price pressure is quite high. Raised expectations are there. Monetary tightening is happening. That is the increase of the interest rates are happening all over the world. What has happened, that the US dollar that was quite strengthened, that was increasing very fast, that has stopped for now, that has reduced for now, okay. The US dollar has decreased strengthening, we can say. The capital flows to emerging market economies remain volatile. There is much volatility, much money is going outside of the country due to the foreign investors are taking out the money from the emerging market economies because they do not have much trust, okay. And global spillovers pose risk to growth prospectus. So if a problem is coming in one country, that is traveling to the other countries also. So that is posing a very big risk, okay. But one thing is good, that the US dollar has decreased strengthening. So at least our currency won't depreciate very fast now, okay, against the US dollars. So I hope you have understood the news article very clearly. This is the first question, very easy question. You have to tell about the repo rate, okay. Second question, this is you have to answer that the GDP forecast has lowered to what. So thank you very much. Do subscribe to the YouTube channel and join our Telegram channel where you will get the PDF of this session, okay. And thank you very much everyone. If you have any query, you can mail us here or you can contact us through this number. Thank you very much.